This is called a shelf. It is one of the most important concepts that you will learn as a day trader. Pay attention in the next 60 seconds. I'm going to show you how to use them. Okay, so the first step is to establish your daily bias. I use the 15-minute range. This is basically stating that when price closes a candle body outside the range, we can establish temporary daily bias. Now, how do we get into this trade? Do we just enter? Well, you could, or you could use the shelf method. To identify the shelf, you take the last opposing candle to the swing. You go from the candle body to the wick and you mark that as a range. The entry model for this can be right at the end of the shelf. You can go for a 1-to-1. You can trail stop using the shelf method. I'll kind of show you what that looks like in this example. If there's a fair value gap above your entry, you'll want to take your stop loss and just protect it by putting the stop loss above that fair value gap. And you can see that was a smart move using that 1-minute fair value gap as a layer of protection because price wanted to mitigate some of that inefficiency. Price reaches up, we get our entry in the shelf, and now price is clear to drop. I mean, we have a downward structural trend and we have our daily bias. So once price drops, what happens? Well, we're in our trade. Where is our TP? We don't have a hard TP level. Having hard TP levels will just get you stopped out early. What I'm going to do is put the take profit all the way down here, and I'm going to use the shelf method to trail price. So what we're going to do is look above us. We can see another shelf right here. I'm going to line this out and mark it just so it's easy for us to see. And now we're going to wait for the same thing to occur. We don't want to smother price. We want price to come back, tap this shelf, move down, and then we can take our stop loss and start trailing. We'll move into the shelf. Once she breaks down the consolidation, we'll move our stop loss even lower. So let's play this out little by little so you can see exactly how this would get played out. So we wait, we're patient, and what happens? Well, price taps the shelf, right? You can see that happen right here. She's already retested, so we're good to set our break even stop even lower and start trailing. So this is the worst that can happen on this trade, but we're not done. We're going to just see what happens. Okay, price starts to break down. Now here's an area where price got held up and started to consolidate, and price retests that shelf right here. You can see the wick, so we're good to trail even tighter. So this is the worst that can happen to our trade. And now we get stopped out, and this is our final trade, and not bad, right? It's a 2.1 risk to reward. Now here's what happens for the rest of the day. In fact, I see another shelf that's really, really clean, and it's a nice little setup. So I'm going to mark that out. Do I see a fair value gap? No. So I'm just going to put it behind the closest wicks over to the left. There's the new shelf right below us. So I'm going to mark this shelf out. Now I got a break even stop. There's a tap, another win using this strategy. And the best part is I have back tested this hundreds and hundreds of times. And if you want to see the back testing, I have a free group on School. All you got to do is type the word challenge in the comments and I will send you the link to join for absolutely for free.